Good afternoon and welcome to GrainTV. It's January 7th, 2013. I'm Logan Burgess. To my right here is Brock Shimano. Well, Brock, let's jump into fire tip here, see how the grains traded on a Monday. Looks like we finally picked up a little bit of ground here after several days of sharp selling. March corn up 5.5. We see soybeans up 21 and Chicago wheat up 3 cents today. Brock, as I said, grains have come down a ways. Finally found a little bit of support here. Fundamentally, not a lot of new news out there, but we did get the export inspections report. What was kind of your take on what we saw there?
I think it was initially pretty positive for wheat in particular. They did exceed expectations for the exports this week. Soybeans came in right within analyst expectations, and corn really missed on the low end once again, which has kind of been a similar story we've seen all year. If you take a look at this chart here, this is the corn chart for exports. The green line is what we need to be seeing given seasonalities to meet the USDA current expectations. The red bars are what we are actually experiencing. So you can see we're quite a bit behind on corn in particular. We're behind by about 103 million bushels of exports leaving the country for corn. If you take a look at soybeans, a little bit of a different story. We are well ahead of pace to meet current USDA projections. We're about 196 million bushels ahead of pace. So this is kind of leading us up to the Friday report if we're going to see some revisions or not.
Yeah, Brock, if we think back to the December WASDE report, we didn't really see any revisions to the demand side for corn or soybeans. The USDA did raise their crush expectation by 10 million bushels, but which surprised a lot of people, they didn't actually touch the export sales projections. Do you think we're going to be seeing that in Friday's report?
I think we definitely are. We didn't see anything last month, like you said. I wouldn't be surprised if we saw a 25 million bushel reduction in the corn exports expected, and 50 million bushel increase in the soybeans expected. So Friday is definitely going to be something that we're going to have to watch, especially on the export sales front.
Yeah, right. So that's kind of what we're looking at from the demand side. We are going to have some ethanol numbers to chew over on Wednesday, but later in the week we're going to break down the production side estimates and really take a look at kind of historically what this January report has done to the grain market. We'll be bringing those all to you here on GrainTV as we move toward Friday's big report. Brock, let's hop back into fire tip here though and just take a look at technically where we sit right now. Real quick here, I want to take a look at soybeans first off. And if we take a look at this soybean chart right now, we've come a long ways from the top. And here just in the last session, this is the March daily chart here, by the way, but we've actually found some support along this long long run trend line here in recent days. And a price level that we've been talking about quite a bit was this 1356 area. That was the low we printed here back in November. And just in the last 2 trade sessions, we've gone down and tested that area, but we're unable to move below it. Seems like the fundamentals in this market right now seem to be holding things up. And take a look at this chart. If we're able to get below 1356 with conviction, it's going to turn into a chart that's clearly moving lower here, lower highs and lower lows. But if we can really find a good bottom here, it's going to take on a totally different feel. Maybe this is the start of a new channel trade that we're in.
Yeah, if we take a look at the corn chart, we know we're hitting some technical support in the last couple of days as well, right around that 1680 area. We're getting the support from that downward slope right there, and we're also getting it from the green line here, which is the 200-day moving average. So that is a key area to watch right now, 1680. We've tested it a couple times in the last couple of sessions. We're going to have to watch that definitely as we head into Friday.
Yeah, certainly. Friday's report's going to give this market a lot of direction. I think, though, this corn market is kind of looking like a repeat of what we saw last year. We saw highs printed here due to a weather scare. Really, demand wasn't able to support things here through the winter. We drifted lower. Here, once again, we found a weather market, obviously of epic proportions from last summer. But here, once again, we're kind of drifting lower right now just due to not a lot of demand in this corn market. Is that a fair assessment? Do you think producers should look at maybe pricing some or putting some put protection on?
Yeah, especially ahead of this report, this could shape up to be a little bit of a bearish report. Early expectations are for yields to be revised a little bit higher, production to be a little bit higher, and the demand side to be down a little bit. So that's going to end up adding to the ending stock. So if it does end up being a bearish report, you're definitely going to want to have something in place to protect yourself.
Yeah, certainly. Well, we're going to take a look here at production side estimates as we move through the week, as I said before. So make sure to stay tuned to us here on GrainTV. If you want to take a free look at the platform that we're using here on GrainTV, it's called Fire Tip. You can visit us over at grainhedge.com and take a no-obligation demo, get some live quotes going for Friday's big report. But I think that wraps up our show here for Monday afternoon. Thanks a lot for joining us, guys. We'll see you tomorrow.